Welcome back, everybody. Today we're going to be going over what is a deed in lieu and foreclosure.
Yes, super exciting subject of what is a deed in lieu.
Right. Let's go. Let's get right into it. So what is it, Galen?
Well, this is when a borrower is relinquishing the deed,
Perfect.
back to the lender in exchange for the mortgage obligation.
Right.
So why would a borrower want to do something like this, Louis?
Well, look, there's two different things. Look, if they had no equity, right, then you would do it. But if they did have equity, why, you wouldn't do it, because why would you want to surrender your equity to the lender, right, to the bank? You want to put that property in the market, sell that property, and capture that equity, right?
Exactly.
And then number two, you would be able to salvage your credit as well, right? That's very important in salvaging your credit, because you can move on and buy another home and not damage your credit so bad, right?
Right.
Now another one is you're gonna stay out of foreclosure, right? No foreclosure report on your credit, right? Because if you did have a foreclosure report on your credit, then your credit is going to be bad for at least 5 to 10 years.
Yes, and it takes a lot of time to
Yep.
recoup that. So there is a qualification process, though.
There is.
To go through this. And
Good
so
stuff.
first, you got to have one mortgage on this property. It must be your primary residence. And then you got to prove that you have lost the ability to make those mortgage payments. Also,
I'm sorry, I don't want to interrupt you, Galen, but lose the opportunity of making the mortgage payments, because we go through this a lot. Like, there's a lot of different reasons why they lose the opportunity of making the mortgage payment, right? Like, they're under distress, they lose their jobs.
yeah, their bad health, things in life happen, etc. Life is going to happen, and there are many reasons why they have lost the ability to make those mortgage payments. They got to prove some kind of hardship.
Yep. So
yes. And then on top of that, the other fact is that there is an improbability that the process may not be approved because if it has PMI or if it is an FHA loan, the bank would rather be paid by the insurance and just simply pay that off and avoid the deed in lieu. So
good stuff.
That's another reason too.
Good stuff. And then the process. Let's talk about the process, right? Number one, you're going to have to fill out an application for this process, correct?
Yes.
Number two, the lender is going to review it to see if you're going to be able to qualify for it, right? And then what's number three again?
Well, then you can get the notice of rescission, which shows that the foreclosure has been rescinded. So that is also your proof.
And then the pros. Let's talk about the pros, right?
Yes.
This is really important, guys. We're going to talk about the pros and cons here. And for me, the pros are going to be, no more monthly future payments, right? And you get a fresh start. And what I mean by a fresh start is sometimes when we're talking to these clients, we have to paint a picture that, like, sometimes you do have to sell your property, right? Because you can start over again. And here's one thing that I say a lot for people that own these properties. I say, look, sometimes you need to make a business decision and not an emotional decision. Right?
Yes, and so these are other possibilities as well as cons that, when they're going through this process, is that there is a deficiency balance. So that may trail after them. So they have to keep that in mind when they do this. The other thing is that they're going to have to vacate the property. So that is another potential hardship there for them.
Yeah, nice. Let's go. Stay tuned for the next one, guys.